Hello everyone and welcome back to Explain the Charts. Today, September 15th, 2025, we're taking an in-depth look at the QQQ Nasdaq, a vital index reflecting the performance of top non-financial companies listed on the Nasdaq exchange. Let's start by looking at the broader picture on the one-day chart, covering data from May 2024 right up to September 12th, 2025. From this perspective, we can clearly see a strong bullish trend dominating the landscape since May of last year, pushing the index higher with impressive momentum. Indeed, recent news from September 10, 2025, confirmed that both the S&P 500 and Nasdaq Composite notched fresh record highs, driven significantly by optimism around AI stocks and hopes of an imminent Fed rate cut. Zooming into the recent price action, specifically from late August through September 12, 2025, we observe QQQ making a strong push towards new record levels. This aligns perfectly with news highlighting Oracle's blockbuster AI revenue forecast, which added over $250 billion to its market cap, and an unexpected decline in wholesale inflation, bolstering expectations for a Federal Reserve rate cut next week. The market is now pricing in nearly 100% odds of a September rate cut, with a significant probability leaning towards a 25 basis point reduction. This positive sentiment is clearly reflected in the price action, with QQQ maintaining an upward trajectory and closing near its recent high of 586.66 on September 12, 2025. However, it's worth noting that MarketWatch just reported today, September 15, 2025, that Nvidia shares are slipping due to a China antitrust probe, and there's a cautionary sentiment that the current relentless rally could turn into an unsustainable melt-up. Now, let's switch over to the one-hour chart to get a closer look at the intraday movements and how they reflect these market sentiments over the past few weeks. Observing the period from late August through September 12th, the QQQ shows a consistent pattern of higher lows and higher highs, indicating a robust short-term uptrend. Even with minor pullbacks, buyers have consistently stepped in to defend key support levels. For instance, we can see brief consolidations around the 565 and 570 levels in late August and early September, which acted as strong foundations for subsequent rallies. The current run-up has established psychological resistance just below the 588 mark, aligning with our daily chart observations. Let's narrow down even further to the 15-minute chart, focusing specifically on the trading activity from September 12, 2025, to pinpoint critical short-term levels and reactions. Here, we can observe the intraday battle between buyers and sellers. The price started the day around 584.30 and saw some fluctuations, dipping to about 583.65 early in the session before recovering. Key support on this time frame appears to be around 583.90, which held multiple times throughout the day, while resistance emerged near 584.80. Momentum indicators, if applied, would likely show minor divergences or continued strength leading into the close, but the limited price movement on this specific day indicates a period of slight consolidation after a significant run-up. Any major news event, like an unexpected twist in the Fed's stance or further developments regarding Nvidia's China probe, could easily break these tight intraday ranges. Returning to our one-day chart for a final recap, let's highlight the important price levels and conditions for future movements. The immediate resistance level to watch is the 588 area. A decisive break above this, especially on strong volume, could propel QQQ towards the psychological 600 mark. Conversely, primary support can be found around 565 to 570, based on previous consolidation zones, and a more significant floor near 550, which proved resilient during earlier pullbacks. For a bullish short-term outlook, the confirmation of a Fed rate cut, coupled with favorable CPI data later this week, would be a strong catalyst to break current resistance. We see this as highly likely given current market pricing. However, a bearish reversal could occur if the Fed delivers a hawkish surprise, or if inflation data comes in hotter than expected. triggering profit-taking and potentially pushing QQQ back towards the 560 to 570 support zone. The likelihood of a significant correction remains moderate, especially as Goldman Sachs warns of recession concerns and the potential for a melt-up turning south. Traders should also monitor geopolitical developments, such as the U.S.-China trade talks and potential tariffs mentioned by President Trump, as these could introduce unexpected volatility. Another crucial factor to watch is the ongoing performance of AI-related stocks and any further news on Nvidia's antitrust issues, as they are major components of the Nasdaq index. Always remember to manage your risk and stay informed on breaking news as the market continues its dynamic dance. Thank you for joining us on Explain the Charts, and we'll see you in the next one.